What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the second half of the week. These stocks include names like Apple, IWM, QQQ, Tesla, and Nvidia. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if you have to. Let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that the market gapped up today thanks to the newest inflation reading coming in at 3%, a much better improvement than May's 4% and closer to the Fed's target rate of 2%. So of course this got markets very excited and investors were quick to buy in pre-market, and then the market kind of consolidated in the same range all day. Stocks like Apple and Tesla, however, which we're going to give you levels on shortly, they did not move as expected. You can see that they kind of lagged behind all day, Tesla and Apple lagging behind, but companies like CRM, companies like Meta, they all rallied, and that's really what picked up the pace throughout the day and kept markets up. Now going into the rest of the week, we do have earnings from notable companies like JPM, and of course financial companies are the backbone of our economy. So if our banks are not doing too well, then it can affect the market. So make sure that you are watching those earnings closely as you go into the rest of the week. Now looking at the shorter term time frames on SPY, we can see that we are most bullish above this level, which is the breakout level that we have struggled at multiple times in the recent weeks. Now that we've gapped up above that level, buyers want to see it maintained in order for us to continue going up. If we break below that level, then we can sell off because that gap is very easy to fill and we can move towards our support of around 440. Now below 440, we're still not in very dangerous territory, but it's going to get buyers upset if we can't hold it. And if we move below 436, it's likely going to be a steep decline towards 431. So keep that in mind. If you're playing short or a put position, it could be a very profitable play on the downside. If you are playing calls, it is okay to hold above 430. It's even okay to hold above this level. However, you typically want to see the breakout be sustained in order for it to continue, especially on very short-term contracts. Now moving on to the next name on our watch list, which is going to be Apple, we can see that, as we mentioned earlier, Apple did not really make very large upside or downside moves today. So let's talk about some levels, but first let's talk about it on the daily candles. We can see that Apple is struggling to get back above its 10-day moving average. This is a level that it has held throughout most of its rally, and it's managed to find buyers at. But today you can see that during a very strong day, the stock couldn't find those buyers, which is a concerning sign. So if you are trading Apple over the next few days, here are some levels that you want the stock to maintain above. First of all, obviously on the daily candles, you want the stock to stay above this 20-day moving average. If the stock moves below it, then it can very much sell off, and here are some points it can sell off to. If it moves below the 186.60 mark, the stock could be in trouble because there's not really strong supports below that level, and it can free fall towards that 182 to 183 mark. You can see that day over day, the stock has been making lower lows, even though the market has been going up. Apple, one of the strongest names on the market, has been coming down. So keep that in mind. Now, of course, the stock is not in very bearish territory yet. Obviously, it's still holding above its 20, and make sure you're respecting those 10 and 20-day MAs because those are very good indicators of where price action is lying. Above them, bulls are in control. Below them, bears are in control, at least for the short term, because they're measuring up to 20 days of moving. Now, in terms of Apple's bullish side, bulls are dying to see Apple close above 193. If it can give them that close, then they would be comfortable to get in, and then they would add to their positions on that 194.48 breakout. Now let's move on to the next stock on our watch list, which is going to be IWM. Now IWM has come a long way from the last time we updated it last week. We can see that last week when we updated it, it was just down here, and now it has crossed back above its 10 and 20-day moving averages, and you can see that volume has come in. However, we want to note that until today, buying volume day over day has been declining, especially on this day, which is a very important thing to note. Because on a breakout, you want volume to increase. You don't want it to decrease. And so the fact that IWM's volume decreased on this breakout is another concerning sign. Now you combine that with Apple and Tesla's weakness, and you can see that there's a pattern of weakness. Yes, Tesla and Apple are not trading in IWM. However, you want a sense for weakness in the overall market, especially when stocks look overstretched. Now moving on to the shorter term time frame for IWM, here are some levels that you want to focus on. Obviously, the highest point that it reached was 193.50 this week, so you want to place a resistance at that level. This is where it got rejected today, so you want to break out above that level for continuation towards 195. Now 191.65 is going to be the most critical support. Below that point, there's not much support. 191.65 is going to be the point in which it managed to hold above today. So if it moves below that level, then we can expect it to sell off towards 189.60. But it won't really be in trouble unless it breaks that level. If it moves below that level, then bears are going to take control once again, because this was the breakout point. You can see that here is the breakout point. Here's the level where it got rejected at. Here's the level where it got rejected at. Here's the level where it got rejected at. So you want to stay above that level. Now, another thing of concern for you buyers out there, this move is very vertical, which means that it's going to be very easy for it to get filled back down. So if we do move below these levels, we can see a sharp fall back down, because the more vertical the move is, the less support that was being created. Next name on our watch list is going to be QQQ, and let's talk about it on the daily candles, where we can see like IWM, same kind of trend. Now this time it's not volume that's concerning us, it's relative strength. So the RSI, famously known for measuring overbought and oversold levels, it also measures relative strength, which is why it's called the relative strength index. Now the fact that we moved up, and you can see that there's a negative divergence forming here. You can see that there's very strong movement above 70 here when we moved up. However, this time around, we broke above that high. However, there was a lower relative strength move, which means that there is weakness on this move, and it could be a signal that we could turn back down. Now, here are some short-term levels to focus on for QQQ. Here we have the 370.30 support. So where did we get this point? This is the point in which we reversed off of today. Now, here's something to note about this reversal. It came in very sharply, which means it didn't build a base. So if this support is broken again, this stock, or ETF in this case, can sell off sharply, because there was not a very strong base that got built up at this level before reversing higher. The sharp reversal can easily be broken, so if it moves below 370.30, it can decline to test the critical 368 support. Below that support, it can free fall towards 363 to 364, taking most technology stocks with it, because remember, this is the tech ETF. Now, if you are bullish on QQQ and tech, you need to break out above today's highs in order for it to continue its rally towards the next price target of, this is supposed to say 376.90, which is going to be your next price target. So above this level, you're looking for this price target to take profits at. Remember, when a stock breaks out of your resistance, that resistance should automatically turn into a support. So if it does break out, you want to move your stop loss to that level and give it some breathing room. So just place a stop loss just below that level, or plan to cut shares if it breaks below that level. Now, moving on to the next name on our watch list, which is going to be Tesla. Very, very exciting. So Tesla did not make any significant moves today, to everyone's surprise. Even though Tesla is in a very strong bullish position overall, you can see that it actually filled its gap back down throughout the day, and volume was quite strong on that selling. In fact, we did enter a Tesla put towards the end of day with our group. I'm going to show you the put, so maybe you can watch it tomorrow. This is our SPY put play today. We can see that we took profits at 163, we entered at 124, and then to end the day, we entered Tesla, and we entered the 265 put. This is a very high risk put. You can play it for yourself if you choose to play it, and it expires this week. We're already up 30% on this put, so just keep that in mind. We plan to take profits around 264 to 265. So let's go ahead and talk about Tesla and talk about its short-term levels. Tesla, obviously, like Apple, making lower highs here. You can see it's making a double top. It made a double top right here around 284.25. Ever since then, the stock has been taking the staircase down day over day and coming down to its lowest point of 265, which is going to be your critical support. Now, this is going to be our price target, because this is where we see that there could possibly be a liquidity grab. So remember, big hedge funds and big institutional traders, they want liquidity, so they want to place their entries where you place your stop losses. So they want you to hit your stop loss, which is everybody's stop loss right now is below 265, and they want to take advantage of you selling your shares so they could buy them at that low, which is why we place our stop losses at very engineered levels in our group because we are already familiar of where liquidity grabs happen. So this is our price target for Tesla. Below 265, it can move towards 261.50, and below that level, it's no longer a liquidity grab. It's probably going to be a downside fill towards 253 to 254. If you're bullish on Tesla, of course, you need a move above 284.25, which is the highest point it reached in recent weeks before it got rejected. So that's going to be the safest bullish range that you could be in. Keep in mind that Tesla is coming off of a very strong gap up. So you can see that Tesla gapped up here, it gapped up here, and like Nvidia, Tesla is going to need to consolidate for quite some time before it gathers enough strength again for it to move towards a new price target. So for Tesla here, it is still bullish. It's no surprise that it's pulling back and consolidating though. Now, moving on to our final stock on our watches, which is going to be Nvidia. Very, very exciting move on Nvidia today and after hours. We have been watching the stock for quite some time now, along with all of you. So if you've been watching our videos, you know where we're going with this, and you know that we're looking for that 440 breakout, which Nvidia gave us in post-market. So now we're looking at Nvidia's chart, and we actually drew up this chart before the market closed for our members, and you can see that Nvidia ended up breaking that 440 breakout in post-market. Now above this level, this is a blue sky breakout. Nvidia has never seen these highs before. So above this level, the stock can rally on and on and on and on. Our price target on Nvidia is going to be between 480 to 500. Now this move could not be very straightforward. It can take its time. It could be slow. It could be choppy. So make sure you're giving yourself enough time if you plan on taking on calls, and make sure you're paying attention to earning dates if you are planning to date your calls further out. So if you are bullish on Nvidia, you need it to stay above the 440 mark for it to continue this breakout. If it moves below the 432 level here, we'll add a support here now that it's done the breakout. So if you are looking at Nvidia tomorrow and you're wondering if it's going to hold the 440 breakout, there might be a little shakeout for the rest of the week. It might come down, move below 432. This would be another liquidity grab, and then the stock would reverse back up. So if you want a safe stop loss, place one just below 432 or below 427.80. And if the stock can continue holding in that range, then it's likely going to continue its breakout, and it's going to move towards our price target of 480 to 500. Again, this will take some time. It's likely not going to happen this week. Now, if Nvidia can't hold this level, it can break and free fall towards this level, but it won't get into really bearish territory until it moves below 396.50. Remember, Nvidia is trading above its 10 and 20-day moving averages, and it's done so for weeks now, if not months, which means that buyers are very much holding the stock despite the valuation. Yes, the stock is heavily overvalued, but the stock regardless is still holding a very strong bullish trend, and buyers are all over it. So I hope you guys enjoyed this video. Thank you so much for checking in. Don't forget to subscribe and like.